Now, the Roadshow will also take Alibaba to Hong Kong, where the company got delisted in 2012 and was declined for a second listing plan earlier this year. For more on this, we turn to Cathy Yang, who's in Hong Kong. Cathy, what's the mood like there surrounding Alibaba's upcoming appearance?
Well, it's a day-long holiday here in the city, Michelle. Folks celebrating the Mid-Autumn Festival, but the mood is just as upbeat for investors who have long waited for Alibaba's listing as the roadshow kicks off in New York and then heads over here to Asia, starting off here in Hong Kong. You know, this city brings Jack Ma back to where he had originally planned on getting Alibaba Group listed. Stringent listing rules, though, forced him to look to New York instead, a move many had seen as a big loss for the city as a premier listing venue. Alibaba's decision has since then spawned talk of a change in Hong Kong's listing rules. Alibaba's listing could have taken place here in Hong Kong, but the firm opted for New York instead. Founder Jack Ma couldn't get Charles Lee of the Hong Kong Exchanges and Clearing to make an exception, give its senior executives full control without owning majority of shares. Mr. Lee stood by the bourse's one share, one vote rule, forcing Alibaba to abandon its listing plans in Hong Kong. The lost opportunity to host what would be the world's biggest IPO listing at over $20 billion has prompted Hong Kong to revisit its listing rules.
Many people in Hong Kong do not want to see Hong Kong losing another big listing like Alibaba.
A broker for 30 years now, Lun acknowledges the loss, but is adamant to a change in the rule in place since 1989 because he thinks it is unfair to small shareholders. Not everybody agrees. Louis Wan of Pride Group insists a change in the rules to attract more companies to list in Hong Kong. The proposed rule change has divided the investing community here in Hong Kong, especially after losing the Alibaba IPO to New York. That aside, a number of Chinese tech companies have already gone ahead to list in the U.S. rather than Hong Kong. And about 70% of those that listed overseas, reports the exchange, use an ownership structure based on weighted voting rights. Hong Kong's regulators are now seeking opinions on whether weighted voting rights should be permitted. Weighted voting rights allow dual-class shareholding structures, widely used in the U.S., giving specific stockholders voting control. Chinese tech companies that follow this dual-class shareholding structure include search company Baidu and e-commerce firm JD.com. Both have chosen to list on the NASDAQ. A change in Hong Kong's listing rule may be likely, says Mark Conan of CCAM.
I think the result could be the development of different share classes to allow for situations where we have companies that don't follow the main board rules but still seek access to capital.
Hong Kong may be pressed for time. Alibaba had earlier hinted that it could list other assets in the China market if conditions allow. Alipay, one of the so-called crown jewels in the Alibaba empire, is being bandied as an ideal candidate. It may be the chance at getting Jack Ma back, knocking again on Hong Kong's doors. And after all that, Mr. Ma, about a week away from his birthday, he is indeed spending his special day on the road, Michelle, is now wooing investors back in Hong Kong, this time to buy into his empire. Michelle?
Yeah, very exciting birthday for him indeed. Now, Cathy, now that Alibaba has given its price range for the offering between $60 and $66 on the lower end than what was expected, what are analysts there saying about where the final pricing could land up?
Well, we won't know final pricing until the day before the listing itself, Michelle. But Francis Lun of GEO Securities described its price range to be lower than expected, leaving room for the stock to rise after listing, calling it a good marketing ploy. Now, Alex Wong of AmpleCap, though, thinks Alibaba deserves a higher valuation. He is confident final pricing will be at the high end of the range because all things considered, making money out of Alibaba's business-to-consumer model, he says, is so much easier, and it's got critical mass to compete with a global network compared with its rival Tencent, which is listed both in the U.S. and in Hong Kong. I also checked in with Marshall Mace, the director of Emerging Alpha Advisors, and he told me, given the hype, he can't imagine the deal would not do well. it's more likely Alibaba would be overpriced given the prevailing mood on Wall Street. Mr. May says there is plenty of long-term growth potential for Alibaba, but there are a lot of clever competitors, so Alibaba has to keep innovating. Its record is, as he puts it, rather one of steady incremental improvements. So only a few breakaway great ideas, such as financial services, would make him think of Alibaba as a worthy investment. So the 2-week roadshow ends on the 18th, and the countdown begins as we speak, and the listing is expected the day after. Back to you, Michelle.
All right, Cathy, yes, September 19th, the big day. Thank you so much, Cathy Yang in Hong Kong.